Whether you're buying options or selling options, you still have to close them if they don't go in your favor or roll them, which is pretty much the same thing. Most brokerages don't have the same features that Robinhood does, so you're not able to roll seamlessly like you would on Robinhood. And I do a lot of rolling on my videos. However, what if you have to manually close your options and reopen them, or you just want to know how to close them? Hey guys, Corey here. Welcome to the channel. If it's your first time, be sure to subscribe, tap that bell so you know when I post new videos. Also, give me a thumbs up as it greatly helps the channel grow. If you guys want to sign up for the free newsletter, right there on the screen, and the link is in the information box below. Tips and strategies delivered right to your email box. And for the first 100 people that sign up right now, you're going to get trade alerts free right to your email box. High five. You guys are doing great. As you can see, everybody's making money with me. We're going to keep making juicy premium, so be sure to sign up for that newsletter. So we're going to dive right into today's video, and it's showing you guys how to close options properly. If you're selling to open because you're selling options, which you should be, then you need to buy to close. If you're buying options, then you have to sell to close. So I'm going to dive right in and show you guys on a covered call that I sold how to close the option by buying to close, and then I'm going to go ahead and sell to open a new contract. And I'm going to show you guys exactly how that will work. It's very similar to rolling options. However, it's a little bit different when you have to do it manually. Okay, guys, I'm going to show you how to close a position that you've opened, specifically how to buy to close your option. This is a covered call that I sold right here on Ford, $12.82. You guys can see I collected $64 juicy premium. And I did this on March 22nd. So this was a little over a month and a half ago, actually almost 2 months ago with Ford. And I was going to let this run its course till tomorrow, but I'm going to lose the $2 so I can show you how to close an option that you sold. So when you sell covered calls, we know that we would go into view options, we'd click on sell, we'd go till next week, we'd pick on the option that we want. However, if we were going to roll, we'd click on roll, but not all brokerages allow this. We would just select a new contract 8 days out for $12.50, collect $12 juicy premium. We already know this because we're rolling down to $12.50 and out a week. However, what do you do if you have to run it manually? What if your brokerage doesn't allow rolling? Or what if you just want to know how to close options the proper way? When you sell to open, selling covered calls, selling puts to get into stocks like I always advocate for, you have to buy to close. You see, buy to close on your brokerage. And what you're going to do is you're going to see what that contract is worth, and you're going to see the bid and the ask, $1 or $2. If I put in $1, I'm probably not going to get filled. And even on expiration day tomorrow, you won't get filled until 3 o'clock in the afternoon. Everybody knows all contracts, even when they're worthless, you're still going to get $1 for them. So the chances of getting $1 for this is not going to happen. Click good for the day, buy to close, review order, submit to buy it back. Highly unlikely this is going to go through. I mean, it could, but it's highly unlikely. See, contracts purchase, $0. $1 to buy it back. Sold it for $64. So right now I'd be at a $63 profit. And I know that doesn't seem like a lot, but Ford is only $1,200 for 100 shares. So about every month you can make about $35 a month, maybe a little more, but you're also getting the dividend of $15 to $20 every 3 months. So realistically, you're making about $120 in 3 months plus the dividend. So you can make anywhere from $130 to $150 every 3 months on Ford, which if you think about it, averages out to be about $50 a month, and 10% of $1,200 shares, 10% is like $120. So 5% would be $60. So you're making just a little under 5% a month, and Ford's very good. Ford's a solid dividend stock, which does not have a lot of volatility. You see, we're not going to get filled. So we're going to click replace order, continue, and we're going to replace this for $2. High fill likelihood, review order. The moment I submit this, it's going to go through because I'm paying the asking price. So people have queued this already in their brokerage as a limit order. So the moment I submit it, it's going to go to someone and fill. When I submitted for the bid price, that was my bid to buy it back. I have to basically wait for someone who's willing to accept the bid or puts in the bid as a limit order, which in this situation is unlikely. In some situations, it's a lot easier. So once I submit this to get filled, I've showed you guys how to properly close an order by buying to close after you sold it to open previously for a credit. And this is what I always do. Once I submit this, it's going to get filled. I'm going to show you guys, and then we're going to sell to open a new covered call. This is how you would roll. The benefit of rolling automatically with Robinhood is, let's say I only had $1 in my brokerage account. Well, I couldn't buy this to close. It won't allow me to, which means if I roll and I roll out to a contract at say $5, I can collect $3 juicy premium. And since it's happening all at the same time, even though my brokerage account only has $1 in it and I'm closing this option for $2, it's fine, because even though it's closing it for $2 and putting the account in the negative, it's selling to open a new one for $5, collecting me $3 juicy premium. So if you don't have the funds in your account, rolling allows you to simultaneously do it for a credit. But if you have the funds, which you most likely are going to need to have because most brokerages don't allow rolling or don't have the rolling feature, at least the ones I've seen don't. But in any case, we're going to submit this right now. It's going to get filled immediately. Ready? Watch. There you go. Filled. You see? Because we paid the asking price. It released my collateral. $62 juicy premium. Now we're going to sell to open a new contract on Ford. And what we're going to do is we can see that Ford options are over here. We're going to go out to next week, 8 days, click on sell covered call. And if I get filled at $12.50, I won't really be upset. I'll just get assigned because I've already collected the dividend. So I'll just get assigned next week if it was to happen. And Ford likes the range. It's range bound between $12 and $13. So even if it goes to $12.50, $12.75, within a week or two, it's just going to drop back to $12.20, $12.30, and I'm just going to buy it again. Or I'll just roll. So I have the option to sell a $12.50 contract for $13. The $14 is the ask price. It's going to be a little harder to get filled on that. $13, if I want to sell a contract there, that's a little safer, and I'll collect $4, or I can just go out an extra week, 2 weeks, sell the 13 and collect $7 and be a little bit safer. So it's about half the money, but it's safer. But realistically, what I'm going to do is I'm probably going to sell. If I go 2 weeks out, I can collect 20. But if I go out 1 week, I will collect 13. So it's better for weekly options, as you can see. So we'll click on this, click continue. I'll try to get 14, which is going to be tough, but we'll see if we can get filled. We'll see if we can get filled here. It's going to be a little tough to get filled. Ford would have to jump up 2 cents for us to get filled on this, but it could. We'll see what happens. Looking like it's going to be a tough one to get filled on. Ford's not jumping around much. It's not really volatile. I bet you the volatility, if I was to check right now, the volatility is probably 22%, 38. Well, in this contract, 27. So yeah, it's 20s, 30s. So it's 15 to 20% below average. Anything below 50 is below average. 50 is average. It's the law of averages in the stock market. 50% is average. So if you have a stock that's got volatility of 50%, that's not high, that's average. 60% is slightly high, 70 is fairly high, 80 is really high, 90 and 100 is really high, and anything over 100 is starting to get to extremely high. Anything that's like 40 or 30 is low, on the somewhat lower end of the spectrum. Kraft and Heinz has like a volatility of 16, 18% like Apple or, other stocks that are similar to it, and 18% is extremely low. Kraft and Heinz might only see a 50-cent movement in like 2 weeks. So very safe, but not a lot of money to make. Whereas stocks like a firm with a 70% volatility, because 70% is not really bad. It's actually the sweet spot. 50 to 70 is the sweet spot for juicy premium. It's only $3,000 for 100 shares or $3,200, depending on if the share price is $30 to $32. And you can collect between $40 and $80 a week in juicy premium. Like a 30 delta or a 25 delta still gets you $45 a week, whereas a 30 delta on Bank of America is like $25. A 30 delta on Palantir is 20. So it's like 2.5 times the premium, yet it's $600 less than Bank of America and only $1,000 more than Palantir. So it's about in between, but it's way more juicy premium. So if you really just want to collect a lot of premium for a lot of movement and have a lot of growth potential, that's why I always say that it's really awesome to have a firm. It's a $3,000 investment, and realistically in a year you can make 30-40% on the stock itself. And on covered calls, I mean, I'm making $400 a month on one contract on covered calls, $300-400 a month. It's like $100 a week almost, depending on my rolling strategy. But for you on the safe side, you still make $200-300 a month. A firm is really good. Still not filled. Fords went up, 1 to 2 cents. It still didn't fill. It's going to be a little difficult to fill this, I think. I don't think we're going to get filled. Guys, we got filled. See, right here, filled for $13 because the price on Ford went up to $12.35. So we're filled on this. That's how you do it the manual way. You sell to open, buy to close, then resell to open. That's how you roll, and that's also how you close options that you've sold. And it's the long drawn out way instead of rolling, but I wanted to show you guys how to do this the proper way. So I showed you guys how to buy to close a contract that you sold. Now I'm going to show you how to sell to close an option that you bought. This is a long call I have on Roblox. I'm not actually going to sell it, but if I wanted to sell it, you're not going to buy to close right here like you would on an option that you sold. You're going to click sell to close. You can also exercise this option, which we're going to do in different videos, and this will allow me to buy the shares at the strike price of the option. However, this is also where you can roll, which we've done in previous videos. This is how you sell this option to close. The bid price is $5.05. The asking price is $5.15. We would get filled in the middle. So I would click on $5.10, medium fill, click review order. What I would do is I would click submit. I can't do that because I'm selling covered calls against it, but I'm just going to go ahead and, refresh this so I don't have to worry about submitting it because I can't. But that's how you sell to close an option that you bought to open. Just like the one I showed that you sold to open, you buy to close. All right, guys, so you can see how easy it is to buy to close on any contracts that you've sold to open. This is how you properly close contracts. And I also showed you the example of how to sell to close on a position that you purchased when you bought to open the long position. You sell to open, you buy to close. And then when you buy to open, you sell to close. I just want to make this simple video to try to help you guys understand options even more. I'm going to let you guys in at a little secret. I have got a full training boot camp coming up in about 2 weeks. So if you guys are excited for that and want to be a part of it, there's only going to be limited spaces available for this course. If you guys are interested, be sure to let me know in the comments below, or you can email me at Corey@investwithcorey.com. It's going to be awesome. Start to finish, there's going to be so much content, like 2 or 3 hours of content, exclusive content, teaching you guys everything from the basics to my advanced strategies and what got me from 13,000 to 7 figures in 5 years. I want to show you guys everything I know and teach you everything I know so that you guys can become profitable and have your wealth grow and also possibly retire early and maybe even quit your job. It's possible. All of these things are possible. We're making money, guys. High five. You guys can see it on the screen. We're making good profits. We're having a good time showing you guys right there on the screen all the people that have made some good money with me this last couple of weeks on my SoundHound, my Rivian, Upstart, SoFi, Palantir, and a few other trades like HIMS. Lots of good trades going on this week that we've made money on, and the week before, and the week before that, and the week before that. So we're making money. You guys want to join my trade alerts and make that kind of money? Well, you got to sign up for my free newsletter right there on the screen and below in the information box. Free newsletter. First 100 people that sign up right now are going to get free trade alerts. Let's do it right now. Sign up. We'll see you over there. Thanks so much, guys, for being here. You guys are the best. Be sure to subscribe, tap the bell, like I said, so you know when I post new videos. If it's your first time here, and give me a thumbs up as it greatly helps the channel. Don't worry. Got a video I picked out just for you right here. This video is just for you. Click on it. You guys are going to enjoy it, and I will see you over there. This is going to show you my journey from 13K to 7 figures in just a little over 4 years. It's a full journey. You guys want to see it. It's right there. We'll see you guys in the next video, and we'll see you over there. Take care of yourselves. Let's grow our wealth together.